Jeffrey Kleintop, it's great to see you. I'm glad you're here back on the show with us.
Nicole.
So what are you watching when we get all this economic data? I mean, I know we got durable goods today. I mean, you could focus on that, but the big takeaway from what you're seeing so far, how are you feeling?
Well, the data looks pretty good. We did get durable goods this morning. We got the German IFO index, which is also an indicator of business sentiment and capital spending. And while they both came in maybe a little bit light versus consensus, they both pointed to a pretty strong first quarter for business spending. And this is important because we're finally starting to see capital spending from businesses begin to kick in. This is an important driver, a long-term driver of this economic rebound. Stimulus is great. It's a great shot in the arm, but it tends to be temporary. In order to really sustain a recovery, you've got to see businesses hiring and outlaying new capital for new trucks and new factories and new workers. And we're starting to see that shape up in a more consistent fashion. So I'm encouraged by what I'm seeing.
Yeah, I think it's interesting that you point out business spending, CapEx spending that we're seeing, and using some of these data points to really quantify that you are in fact seeing it, and that it's not stimulus from the government and that gave a boost in the, shot in the arm to folks to go out shopping for retail sales. How concerned are you about the consumer and the unevenness of the recovery? How much, to have business spending, that's real, that's fundamental, that's based on orders and needs and such. As far as the consumer, some have jobs, some don't, some are getting stimulus checks, they spend them. Don't you feel this certain unevenness? How positive are you going forward?
You bring up a lot of good points, and I think there's an unevenness across countries as well. Of course, we'll get the consumer confidence readings for in the U.S. and in many European countries, many Asian countries, Korea this week. So we'll get a little bit of a sense of how they're feeling and whether the different speeds of the vaccine rollout are affecting consumer behavior or at least consumer attitudes towards spending. But I think we've seen a good amount of demand from consumers, at least on manufactured goods. The question is, how about services? Do people feel comfortable beginning to book trips for the second half of this year? Flights, going out to restaurants, theater, these types of things. We are seeing increasing airline bookings as we look out to July and August. We're not hearing as much from the airlines themselves, but looking at the OAG, the official airline guide, we can see more bookings, more capacity being brought up by the airlines, suggesting they're either anticipating bookings or they're getting them. So I'm encouraged by that. I'm hoping to see more consistent improvement in consumer confidence so that we'll sustain this recovery in the second half of this year beyond those stimulus checks.
Yeah, I see what you're talking about. And I know you have two investment themes at this time that you're really focusing on, defense and buybacks and the benefits of those companies. Tell me a little bit first about the defense story and where the opportunities are here and why.
The defense story is interesting because in the last 3 months, we've really seen defense stocks outpace the rest of the market by a pretty wide margin. And often when we see this happen, it's usually because of a budget, a budget revision to defense spending. But that really isn't the case this time. I think it's more tied to concerns about geopolitical tensions rising, whether it's China, Taiwan, or in the Ukraine with the U.S., Russia, or maybe Israel and Iran. I'm not sure exactly. Maybe we're unable to put our finger on exactly what it is, but I think that's one of the things lifting defense stocks. The interesting thing, though, is that defense stocks aren't really, this is surprising, a great hedge against geopolitical tension. Generally, when we do see tensions flare up in the form of a missile strike or some NATO military action, defense stocks only go up about 50% of the time, and they rarely outperform by anything more than 0.5%. And usually in the day of the event, their performance is very mixed. So half the time it's up, half the time it's down. So I don't think defense stocks are a particularly durable theme in the markets here. I know tensions are on the rise, but I think even a flare-up is unlikely to get them to really perform. And of course, if tensions begin to ease, now that Biden's into his 100th day this week, and we may begin to see more of an outreach to some of these countries, the stocks may begin to fade. So I'm not as enthusiastic about the durability of this defense theme emerging in the markets as I am around buybacks.
Which brings us to our next point. Thank you for leading us right into it, because we talk about these companies. Buybacks have been very popular, right? And really shows companies believing in their own company. And that's why they often do these buybacks at a good price. But then what happens? There's some historical data that's giving you some confidence, right? Can you explain what happens, with these companies? They're doing the buybacks, and then what? And this might be very important for investors to listen to Jeffrey Kleintop right here. Go ahead.
Thanks. Well, yeah, this is interesting. For the last 6 months, companies that are doing buybacks are outperforming the average stock in the market by 15 to 20 percentage points, both here in the US and in Europe. This is something we're seeing around the world. And it's an interesting theme, and it doesn't really overlap with value versus growth or small versus large or any other themes that we see in the market that have been less consistent. This one's been consistently leading to more and more outperformance. And the interesting thing is, if you look back to the last cycle, this point in the last cycle, let's say in 2010, we really started to see a long-term period of outperformance by buyback beneficiaries. Firms that were buying back their shares really saw outperformance consistently for 5 years at this point in the cycle. Now, there are plenty of differences between this cycle and the last one, but I think this is one that could echo, and we're seeing buybacks come back in a big way. Here you can see whether you're looking at in the dollar amount of buybacks being done in Europe or the number of S&P 500 companies engaging in buybacks. It's really rebounded from the stall we saw last year. And as investors get interested in this theme and this becomes an important driver of the market, it's not necessarily short term. We've seen this last for years looking at this stage of the last cycle. So this could be one that's durable in the markets and worth taking a look into.
Yeah, and as you said, could last years, right, with this optimism that you're showing with all this historical data. I think it's very interesting. So we get, last but not least, just a big picture takeaway from a pro like you. We're getting a lot of earnings this week, many of them tech focused. We'll be hearing from the Fed as well, right, a Fed meeting. Do you think everything's going to be somewhat status quo? Or are you expecting just the slow improvement and the Fed to stay steady? Or could there be some surprises? And if so, what?
I think if you could miss one Fed meeting this year, it would be the one this week. I don't think we're going to hear anything new from the Fed. We've heard so much from them recently. We just got the dot plot at the prior meeting. We've got the testimony that just took place. So no, I don't think we're going to hear much from the Fed. I don't expect that to be market moving. I think in the next few meetings following this one, as we get more into the stimulus and concerns about inflation, that may become more important. And in terms of earnings this week, I don't know. I mean, so sure we've got 4 of the 5 FANG stocks reporting, but they haven't been driving the market as much as they have in the past. So a surprise from one of them, the market may not be as vulnerable to that or even surprised by that as it may have been in the past. I think instead it's these more durable themes in the market that I'm more interested in.